Now, the International Monetary Fund has expressed concerns over the Nigerian government's strategy to issue domestic dollar-denominated bonds. This according to the recently published IMF Staff Article 4 Country Report for Nigeria, released on Thursday. The fund warns that this move could exacerbate pressures on the naira and elevate the costs associated with naira securities. Financial market specialist Ajibola Tobi-Osho joins us now to discuss this further. Ajibola, good morning to you. It's such a pleasure to have you on the Global Business Report.
Yes,
right. All right, let's begin with the IMF saying that the domestic US dollar bond planned by the Nigerian government could put pressure on the naira. Just talk us through this. In what ways could that happen?
Okay, first of all, whichever means the CBN or the federal government choose to raise money, we should understand that it would put pressure. Our debt to GDP ratio would rise. That means that we'll have to pay a lot back in terms of our coupon, in terms of interest of borrowing those money. So whichever way we go through this route, we have to pay something for it. And that is what people have been talking about from time to time. If you think about it from the days of Buhari, I mean, the costs have been rising and all market participants, economics have been raising concerns as regards this. So this is not a different ball game. I mean, from the beginning of the year, it shows that things needed to be done to curb the rising exchange rate. Hence, we said start raising interest rate locally to attract more and more foreign investors. So this is in a bid to capture the money, the dollars within the economy. Will it give rise to additional costs? Oh, yes, it would. But whether or not we raise money through the dollar-denominated bond or the naira-denominated bond, will eventually have to pay interest cost on these things. So I don't think IMF is coming from the part of, say, it is bad, because if you read through the article, they highlighted the good part of it to say would be able to raise dollars locally, would be able to attract foreign investors to come and invest in that market, so invest in the local market. So that's good for us. We should be able to boost up our dollar holdings at the end of the day by doing this. So there were the pros and there were the cons. They had to highlight the pros and the cons. So let's not look at it as like a no-no, like something that it would destroy the economy. No, they're just trying to highlight that, okay, if we go through this route, we should remember that, okay, it might eventually put pressure on the naira, and that is at the point when you then need to get out, when some of all these bonds start maturing and then you need to pay for it, right? You need to refund the money back to the people that invested in it, and then you need to, so that's when all this pressure might come in. But for now, we need to do what we need to do. We still need the foreign currency in this country. We still need to boost our foreign reserve. We still need to do a whole lot of things. And one way or the other, we need to attract the foreign investors. So whichever way we can capture the fund, whether locally, whether internationally. Yeah, we just need to do what we need to do. But to be specific and to say it once again, I don't think I don't think they're trying to make it look as if, no, it's the end of the world. If we go through this route, they're just trying to highlight that despite the fact that this is a good route, we should also think about the negativity in terms of raising money locally. That's what they're trying to say. So
there's no cause for alarm, is what you're saying.
No, I don't think so. I mean, because if you go through the review and all they talked about, there were a lot of things that were highlighted, right? They talked about the different phases and the different parts. In fact, they even talked about our local borrowings to going that high. Us borrowing at 21% discount and yield and all, it's a lot, right? And it will continue to put pressure whether or not on our naira. Do you understand? It will continue to give rise to increase in our debt to GDP ratio, whether or not we want it or not. So all these are, in as much as we need to do it, they are the cost we have to pay for repairing the damaged economy. So they are the costs we have to pay, in my own opinion.
I'm glad that you're talking about cost, because this is something that the IMF has really emphasized as well, in terms of saying the bond could increase the interest rates for the government. In terms of just shedding some more light on that, in what ways could this happen? Okay,
so let me use layman language. Yes, you come and you borrow money from me, for instance. You say you want to borrow 20,000 naira, and then I tell you, okay, for giving you 20,000 naira, you have to pay something for it. And I tell you have to pay 30% for it. That means in 1 year's time, let's say we borrow the money for 1 year and you have to return it. That means you'll be returning how much? You'll be returning close to like 26,000 to me. That 6,000, what if whatever it is you use the 20,000 from, you didn't make up to 6,000? Do you understand? Whether or not you didn't make up to 6,000 is not my concern. I just know that at the end of 1 year, you have to return 26,000 to me. That is a cost on you. Do you understand? How you want to manage what you want to use the 20,000 naira is not my business. You still have to pay me 26,000 naira at maturity. So let's look at it from the Nigerian perspective. We've been borrowing and borrowing and borrowing, and not borrowing small monies, huge monies. Do you understand? Huge. The borrowings this year has grown to trillions, close to 10 trillion between January and now. And all this money were borrowed at very, very, at all eyes we've ever seen. Some of these bonds, you are having to pay coupon close like 21% on them. It's a lot, right? It's a whole lot. It should raise concern because eventually you look at it like, how would the government pay this thing eventually? If you notice, that's why they kind of put their borrowings around the short end of the curve. If you notice, they stopped issuing the long-term bonds. They made sure that the longest bond on the maturity is close like 2033, that's like a 10-year, 9-year paper, because they're trying to ensure that they can't pay coupon at this high cost for long-term bonds. Do you understand? So they're just trying to put everything around a limit. Yeah, it is concerning, but eventually, like I said, we need to pay some things to fix the economy. The economy is going through a whole lot. We are in a major storm. Something needs to give way for us to come out. Eventually, when we then come out, yeah, we then now see rates come down. But for now, this needs to be done. Is it concerning? Yes, it is. Because at the end of the day, you look at it and you're wondering, how then do we then get out of this so much cost if we are incurring more cost for ourselves? But it is what it is that needs to be done.
Some very valid points you make there. Something is going to give at the end of the day. But now the government says it wants to use the bond to entice the billions of dollars in domiciliary accounts in Nigeria. Can you see the government's perspective on this?
I think it would be a success. Some of these monies are sitting in banks at what percentage? 0.2, 0.3%. Okay, maybe some are lucky to have invested in the mutual funds and all, and yeah, maybe they're able to get slightly better than that, say 5-6%. But I think the government should be able to capture it by offering very good rates. If they offer very, very attractive rates for long term, yes, they would be able to capture as much as they can, because despite the fact that the money is still within the economy, whether you like it or not, it's sitting in the bank, whether it goes to the government or not, you don't even know whether it has been given to the government indirectly. Do you understand? So yeah, I think it would be a success. I think it would even attract more foreign investors that bring money into the economies that might just think that they don't want to go through the treasury bills or local instrument routes, can go through the dollar denominated paper. So I think it would be a successful.
So you see the merits to this perspective?
Yeah, I do. I mean, at the minimum, we're able to raise quick dollar for ourselves, boost our reserves, right? Do the short-term spendings that we need to do. I mean, that's what we've been trying to do anyways. Whether or not we think about it, on the broad sense, the raising of interest rate is to attract foreign investors. What they do is that they bring dollars in, they give it to the federal, they give it to the CBN. The CBN takes dollar from them, give them naira, and then they invest this naira in the local instrument like treasury bills and bonds. So whichever way they are, we look at it, they're still going to bring the dollars in and they're still going to invest in our country. So it's a win-win at the end of the day. Yeah.
But talking about investment, the government also says it wants to use the bond to attract, investment from Nigeria's diaspora. What are the merits here?
Yeah, so Nigerians and diasporas, you see some of them, they send money home and they just leave it in their bank account. They don't do anything with it. Why not? So in fact, some of them might even, we can even look at it from the perspective of they have the money over there, they are probably investing in the US Treasury that's giving them 5%, 6%. This is an opportunity for them to make good use of the money. For those that are scared of bringing their money home, that feel, my money might get lost, well, I don't think we have a lot of volume of that. Some people at the end of the day still want to come back home, to come and reside in their country. So it's just a way of building your investment across all spectrum of things. So like I said, I think a whole lot of investors will participate in this, not just Nigerians in diaspora, I would say foreign investors, we even see local investors to play a good part in it. I'm looking forward to it. I'm really excited about it. It's something we have not seen before. It's something we would like to play in our own financial market. It's something we would like to even see how it pans out, do you understand, in terms of the secondary market trading. So I'm looking forward to it. I mean, it's something exciting to look forward to. I don't think it's a disaster like I said earlier, and I don't think the way we are pounding on it is as much as we should scare over it. Yes, IMF has said some of these things, and in my opinion, they've highlighted the good, the do's and the don'ts, the bad side and the good side, which is what it's available to any kind of investment. There's no investment that doesn't have the good and the bad side, if I'm correct. So they're highlighting the bad side for us raising this money. So whichever way it goes, I think it's a fine one.
There's certainly a lot of potential to it. Now, some banks in Nigeria already offer USD investments, as we all know. Yeah. But can the federal government compete with what they are currently offering?
I strongly believe they will just have to have a bit of premium. So it's just going to be whoever, as in the person with the highest rate win. Let the borrower with the highest rate win. At the end of the day, it's even a bit reflective. It even makes it more competitive. It means that for you to want to get my dollar, you should really deserve it. Because if the federal government is giving me, say, hypothetically 10%, why should I give you at 9%? Then you should be offering me something better. Do you understand? So I think it's all about the rate at which they set to give, the interest rate they set it at. But I don't think it's going to be a problem. I don't think, I mean, we do Eurobonds, yeah, and it's always very, very bidded for all across the world, right? So I don't think that interest in Nigeria has been lost. I don't think that positivity in our economy has been lost. I just think that we just need to do the right things, and we'll be fine. So that we will not be able to compete with local banks. I don't think that's the point. I don't think that's even an issue. It's all about setting a good level, setting a good interest rate, and everybody will fall in line.
Having the right parameters on ground.
Yes, exactly,
as well.
and everybody will fall in line.
Right. I like the positivity here, and I believe it's what we need.
Yeah, that's what we need. We just
honest.
need to look at it from the bright side,
yeah.
and we just need to keep looking at it from the bright side, because whether or not we believe it, whether or not we see it, we are not out of that storm yet. The storm is still really, really thick. Maybe we're just 20% into it, and we still have like 100% to go, even 200, because we need to, first of all, get out of the sun and then move the economy to a place where we can then now sit back and relax. And we are not there yet. So something has to give. I keep using that language because that is what it is.
Because indeed something does have to give.
Something has to give. Something has to give. I mean, at the end of the day, we still have to be cautious too. We still need the fiscal side to come in play and then come in junction with the monetary policy side. There still needs to be a lot of deficit cut. There still needs to be a lot of decorum in how they spend money, but something has to give eventually.
Cautious optimism,
yes.
Really. Well, let's talk about Naira-denominated bonds now. You know, we have a new circular, as you know, from the Debt Management Office with an offer subscription by auction for 3 tenors. And so that I do not give the wrong terms, we have reopening of existing offers for 5-year, 7-year, and the new 9-year offer. Correct. What do you make of the coupon rates?
So the coupon rates for the 9-year and the 7-year is already set, so they are just reopening. It's already set. The new one is the 2033. Well, the last 2034 coupon rate was about 19%, but currently that bond is trading within 19.5 axis in the secondary market. We would expect that this 2033 might be the new high coupon bond in terms of the one that is trading in our local market. A lot of people are I mean, they're struggling between 19.4 and 19.6 as the stop rate, hence that might be the coupon rate. But let's see how it goes. It would be a very high coupon bond too, as it is. 19.52 will be a long one, but I think it will be a bond that will be loved by all, especially our PFAs. PFAs like bonds that give them high coupon. It means that they are able to, expect bring in more monies at each time that they're selling, paying coupon on it. So I think it will be a good one. I think it will be a successful auction, but let's see how it goes, because the market liquidity is still very, very tight as at today. Lots of banks were struggling in how to take clients in for the auction bid, but at the end of the day, we still expect that it's going to be a successful one.
Now, the entry point is 50 million naira, though. Yeah. How do average Nigerians get access to this?
So it's very easy, right? Most times, banks try to work around, asset managers try to work around auctions for retail clients. What they do is that they go for the big sizes and then they sell it to them in bits. Of course, you might not get it at the rate at which it stops at the auction, but the spread is never too crazy. It's never far off from what the stop rate will be at the auction. So anybody that is interested should just speak to his banker. The banker would be able to advise them. They definitely can invest below 50 million, and it would just, like I said, they might just have to pay a price compared to if they had to go directly to the auction and get it at the stop rate.
Oh, I see. So there are some navigational
yes. They will just sell it in parts and bits. So what it technically means is that if I was a bank, I'll go to the auction and I'll buy, let's say, 100 million naira, and then I'll sell it to retail clients, 20, 10, 5, but at the cost. If I'm buying it at 19.5, I would definitely not sell it to you at 19.5.
That sounds like a very feasible, more
navigable path. So it's available to everybody. It's just ask the right question. Walk into any bank, your customer service would attend to you. It's available to anybody. It's not restricted it is actually. At the minimum, the bank try to break it down to their retail clients as much as they can. Now, for different banks, I'm sure the lowest volume will vary. Some banks can tell you, I should be able to sell you 1 million. Some will tell you the minimum I can do is 5 million. But so it depends on the bank and their policies. But like I said, I'm sure they should be able to do it in small sizes.
That's certainly refreshing to hear then. That's certainly, so there's room for everyone to
there's room for everyone, for everybody to participate.
All right, let's move on to Nigeria's money market now. As you know, we had a Treasury bill auction on May 8th, but we didn't see any change in rates in comparison to the previous one. What is your interpretation of that?
Well, that's not even the first auction that closed at the same level. Like 3 auctions consecutively have closed at this level, and it's just indicating that for now the DMO is trying to cap rate. If there's any reason to raise, then they would, but they can't be raising rates if there's no reason to. A lot of people, if you see the subscription is still about 879 billion, that's still a lot of subscription for an auction, right? So they see that there's a lot of interest in the market. They see that a lot of people are still interested in buying their treasury bills. So why not? I'll just keep it at a point till I realize that, okay, I need to raise more, then I can now give room for extra basis points uptick. But raising interest rate at every auction is not even good for the economy. We already talked about cost. So if I know that I don't make anything, there's nothing positive in for me if I raise the interest rates at this auction. Why do I then need to raise it? When the need comes, they would. But for now, market is happy for 20.7%. Trust me, the market is very, very happy. This bill trade at 20.4, 20.5 in secondary market. So it is a bit reflective that market is happy at this level. Until we become unhappy, to ask for more, they will sell it to us at this level.
Okay, now, I mean, in the event that inflation keeps rising and we see another rate hike in MPC decisions in Nigeria, what happens to rates at this point?
Then a decision can then be made, right?
At that point? At that point.
The decision can then be made whether they want it to be reflected in interest rates or not. Do you understand? They might continue to hike MPR, but you still also think about it from the part of the demand and supply. If there's always demand for what I have to supply, then why do I need to make it cheaper? Until I see that I don't have demand again, then I can make it cheaper. But for now, I don't see any reason why I should make it cheaper if there's still demand for my goods. Do you understand? So let's look at it from the demand and supply perspective. I have a good to sell. There is demand for it. I don't think I need to make it cheaper until there's a need for me to make it cheaper.
That's as simple especially as that. With the law of market dynamics.
Exactly. I don't think I need to make it cheaper. At the point when they increase interest rate, at the point where MPC is hiked, I mean, we don't know what it's going to be yet. Maybe 100 or 200 basis points. We're not sure yet. There might be still need for that because of where inflation is and where we think inflation is going to be again for April. But at the end of it all, do I have demand for what I'm selling? Is there demand for what I'm selling? If there is demand for what I'm selling, do I need to make it cheaper? When I need to make it cheaper, I will make it cheaper. For now, I will keep it at what it is.
Ajibola, a very insightful conversation we've had and lots to look forward. I really love your cautious optimism approach to this, and we hope to have you again on the Global Business Report very soon.
Thank you.